Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate filings so you don't have to. Today we're diving into Ocean International's latest proxy statement. And trust me, it's not just a bunch of boardroom buzzwords, it has the crystal ball to solve the unsolvable. Oceaneering, for those not in the know, is a big player in subsea robotics and engineering. Think underwater robots and specialized services for the oil and gas industry, but they're also expanding into aerospace and defense. Today we find out how is business board and pay is doing. First off, mark your calendars. Their annual meeting is on May 9, 2025. This is when stockholders get to vote on important stuff like who sits on the board and how the executives are paid. It's like a corporate election. Oceaneering breaks its business down into 5 main segments: subsea robotics, manufactured products, offshore projects group, integrity management and digital solutions, and aerospace and defense technologies. It's quite diverse, from building underwater robots to providing engineering services for the US Department of Defense. The CEO's letter emphasizes inspiration, innovation, and solving the unsolvable. It sounds like they're trying to project an image of a company that tackles tough challenges and delivers strong financial results. Building confidence with all stakeholders is what they call it. Now let's get to the numbers. Revenue came in at $27 billion. That's a 10% increase year over year. It shows the company is managing to grow its sales, quite impressive. Operating income came in at $246 million. That's a solid 36% jump from the previous year. That indicates that they're not just selling more, but doing so more efficiently. Net income did well with $147 million, up a whopping 51% from the previous year. This suggests that things are well from top to bottom. And finally, adjusted EBITDA, a key metric, reached $347 million, a 20% increase. A company can't just cook up the numbers if its EBITDA is growing right. Also, it's worth mentioning they bought back 827 shares, returning about 25,427 shares, returning about $20 million to stockholders. Beyond the financials, they won a big US DoD contract. Also, they acquired Global Design Innovation Limited in order to get better engineering and global design. The board of directors consists of experienced members with diverse backgrounds. They stick around for an average of 8 years, implying good stability and knowledge of the company. The average age is 65, which suggests they bring a lot of industry experience to the table. Stockholders have been consistently approving the company's executive compensation program. They highlight pay that is aligned with performance, a clawback policy, meaning they can take back pay if something goes wrong, and engagement with stockholders. All good signs of a responsible company. Stockholder engagement is key, and they regularly engage with investors on topics from business strategy to sustainability reporting. Okay, time to cast your votes. They suggest voting for the election of directors, approving executive pay, ratifying Ernst & Young as auditors, and approving the amended incentive plan. The board oversees the company's strategy and manages risks, including cybersecurity and making sure the compensation programs don't encourage excessive risk-taking. They highlight governance factors, including annual self-evaluations, independent committee members, and a prohibition on hedging by directors. That means the people leading the company are actually invested in the company. With the exception of the CEO, all directors meet the New York Stock Exchange independence requirements, so there are good checks and balances. The audit committee consists of Paul B. Murphy, Karen H. Beachy, Deanna L. Goodwin, Rima Poddar with Paul Murphy as chair. The compensation committee consists of Deanna Goodwin, Karen H. Beachy, W. Bill Berry, John Eric Reinhardson with Deanna Goodwin as the chair. The nominating, corporate governance and sustainability committee consists of Stephen Webster, Paul Murphy, Rima Poddar, John Eric Reinhardson with Stephen A. Webster as the chair. They're focused on business resiliency over short-term gains, balancing stockholder sentiment, customer demand, and geopolitical shifts with their commitment to superior returns. They focus on ethics, compliance, diversification in energy and non-energy markets, and greenhouse gas reduction initiatives. One interesting related party transaction. The brother-in-law of a board member serves as Director of Sustainability with a $251,000 salary. It's worth noting, but seems to be managed appropriately. The board values diverse experience and fresh perspectives with board qualifications including corporate development, energy, financial management, etc. Digging into some key director qualifications, we have Roderick Larson, the current CEO with over 3 decades of experience in the oil field services sector. Kevin McEvoy is the board chair and former CEO, bringing decades of experience to the role. Paul B. Murphy Jr., an independent director, has experience in the financial services industry, providing value in financial strategy and risk control. William B. Berry brings 5 decades of leadership experience in the oil and gas industry. Rima Podau's qualifications include artificial intelligence and other emerging technologies. John Eric Reinhardtson brings an extensive international perspective on the oil and gas industry. Karen H. Beachy brings more than 30 years of experience in strategy, supply chain management, public policy, energy transition, and stakeholder engagement. Deanna L. Goodwin brings expertise and experience from the oil and gas services sector, as well as an extensive public accounting and auditing background. Stephen A. Webster offers insight to the board with business leadership skills developed through his experience as a CEO of various companies. Diving into director pay, non-employee directors get a mix of cash retainers and restricted stock. Kevin McEvoy as chair makes the most at $436 and $983. The compensation committee believes that the work of their team aligns among their leaders, workplace, and stockholders. Time to look at the executive team. Roderick A. Larson's target LTI, long-term incentive, is at 500%. Okay, so the CEO made $7.4 million in 2024 and the CFO made $2.6 million. There is a pay versus performance table that the SEC forces with adjustments made to the total compensation. Ernst & Young charged nearly $3 million for all their audit and other services. So what's the overall take here? Oceaneering seems to be in a good position. The company is growing and profitable. This translates into significant gains for the executives. They're clearly incentivized to keep the company performing well, and it reflects in the numbers. Accession is expanding into new markets like renewable energy and defense. They also face risks with the reliance on the oil and gas sector, exposure to global events, and competition in technology. Oceaneering appears to be well managed and strategically positioned. If you're an investor, this report should give you a good snapshot into the inner workings of the company and if they are to be trusted with your investment. Thanks for watching. If you enjoyed, please subscribe, like, and comment.